The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 26th day of October. My pleasure to be here. One of the most critical days, I would say, and I'll tell you why. If the Dow, which was down over 500 points at one point, is starting to come back, it's down 275 points, having gone to 24,533 this morning. It's really important that the market closes pretty okay today, because if there was a close back under the, even if it's a 400-point decline, my suspicion is that on Monday with the news media, just everywhere you look, they're going to want to advertise the fact that the Dow is now, all the markets are way lower than they were just a couple of weeks ago. They're also, in some cases, unchanged for the year. They're going to make a big deal about this because they've tried everything else to shake things up, and this would be perfect. This is the one. I don't see any conspiracy theory. I just see this as a really good opportunity for the media to have something to say this weekend. And if the Dow closes down sharply, that means that on Monday, when we come in, there could be a really deep correction to the downside. Just real fear factor. The ideal scenario for me would have been for the market to have tried to rally earlier today and then reverse the whole order and then close very weak. And then Monday we get the kind of washout that says, you know what, there are many really good bargains, even if they are just intermediate-term trades, even short-term trades. This says to me the whole process can last a lot longer if there is a rally today and the market is down at 270 and the Dow. Let's just go through this one at a time. So we've got the S&P, SPX.X, there it goes. S&P made a low this morning of 26.28. The all-time high was 29.40. I would say that's quite a decline. Yesterday it was a 9% decline. Today it's about 10.5%, 11%. So we're looking at down 38 to 26.67. Not a bad candle at all intraday. So we'll see if we can close better than this by the end of the day. Look at the trend line support that it hit in the weekly chart, the middle chart. It's that monthly. Just got a couple of sessions to go for the month to end. Those monthly charts are just not very good. QQQ, the index 100, trading down 3.55 at 167.50. It's actually been one of the stronger indexes today, even with Amazon and Google down sharply. Now look at this. It went to a lower low. It went to a leg E. And our whole thing about this is that in the Chapman wave methodology, we're getting D's and E's to the downside, as the stochastic is having a slightly positive divergence in most of the indices, not the MACD, but the stochastic. So that is a positive. As I say, it's really important for the market to come back and at least ameliorate some of that disastrous early morning sell-off. The low today and the Qs was 164.23, so it's up over 3 points higher than that. Whoa, that's very good. 64, yep, over 3 points from the low. And really attempting to establish some kind of a base. And in this case, unlike the Dow and the S&P, the Qs, the MACD histogram, these little vertical red bars, I'm going to be talking about this. What really good timing this is. Tuesday night, I do my webinar for subscribers. You can become a subscriber. Go to the front page of TFNN, Money Back Guarantee. And I believe that this is going to be just the most opportune time to be looking at all these different sectors. Okay, let's go straight to this QQQ. We need to see the Qs in the 169s by Monday or Tuesday, and they'll say, phew, alleviated some of the selling pressure. That weekly chart is just terrible, and the monthly chart is really not good. Let's go to the IWM. IWM right now, the Russell 2000 down at 195 at 147.16. Leg F to the downside. MACD is very poor. Stochastic is terrible and 10%. A weekly chart is just really ugly, and so is the monthly chart. It's going to take a lot to repair this baby. It's going to need to hold at the 147. It needs to first climb and close above 152, and then it needs to get into the 154s and hold it for about 2 closing weekly Friday for the chart, bars for the chart in the weekly to even start to improve. Let's go to gold, which was down earlier, and then had a little bit of a rebound, and then had a little stronger rebound. It actually went, the parameters are 1232 was the low, 1246 round number was the high. It's trading at 1241 right now. That means that we need to look at silver, SI right now. Silver is trading up 12 cents, still stuck in that range, hasn't broken out. Weekly chart is improving technically, but the price, it needs the 1520s. How long have I been saying that for? 1520s. Let's go straight to the dollar. Dollar was very strong, went to an extension in leg C in the daily, but the UUP, which we've been long since the 6th of April, there we go, is actually in leg D. So is this a leg C or is it a leg D? I'm going with the root, and the root says C, and it needs to get above, what was the high today? 96, I lost that, huh? Oh, 96.50 was the low, 96.86 was the high, and we need 97 to break to a new weekly high and a leg B in the monthly chart. I would say that this is still very strong. The dollar is acting very well. Now, a couple of things going on. Crude oil. Crude oil used to be a big factor. Now it's just down in the lows after going to the 76s. It's in the 67s. Yeah, it's just kind of stuck here. It's held in the 200-period moving average in the weekly very nicely. Now, for my webinar, I'm going to spend quite a bit of time on the yields. That's the TLT, the bonds, the 5-year, the 10-year, and the 30-year yields. I'm going to be looking at that. Why? Because it's just so important. The reason why the TLT has not broken out as it normally would do in big market declines, you usually see money flow from the equities, the insecurity of equities or securities into the security of bonds, and it hasn't happened at all. And that tells me that there's still a really big fear that the Fed is a trajectory. Their aim is to raise rates because they see no reason why not to at this stage, and that we will see an increase in the rate. The market thinks so in December, and that's why money didn't come into bonds, because there's a big hesitancy right now. What am I forgetting? I'm forgetting the EUR-USD. Euro's been acting very poorly. This is the euro-dollar currency pair, and it is trading up. It's made a leg C to the downside. It's acting quite nicely here. It's up at 1.14. It's up 0.03. Yeah, that the weekly and monthly charts are not very good. Let's see what the USD JPY, the Japanese yen, is doing, and that's gone to a new low, leg D. There's the dreaded H. I'm going to be talking about these patterns. I think this webinar is going to be one of my most exciting, at least for me, because I'm going to be talking about the patterns that have worked since we had the sell signal in the Dow just off the very, very top, and the semiconductor index. I'll be right back. Basil Chapman.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back and we're looking at, here we go. Now let's look at different sectors. If you look at, for me the leading sector, 2 sectors really, has been semiconductors, the March high, and the IWM. That's the Russell 2000. Why do I call them leading sectors? I mean, leading sectors in weakness, leading sectors in strength. Of course, you've got the XLK, that's the S&P tech sector. You've got just a bunch. You've got your Qs went to recent highs. So what I'm looking at here is the semiconductor index at 114.55. The week of the 16th of March goes to a high, all-time high. Turns out to be a leg D in the weekly chart. I'm sorry, a leg F in the weekly chart, a leg D in the monthly chart, and now we've got more than a 1-to-1 of the downside, even though, you know, Intel came out with earnings and good expectations. I have to tell you, everything I'm hearing about the semiconductor index has been saying for almost all year that there is internal weakness there. It's going to take a while, and it'll probably be the first quarter before, that's the first quarter of next year, before things come right. That doesn't mean to say they can't make technical lows in the charts, but I'm just talking about business-wise from what I'm understanding. That's going to be very important. And once again, semiconductor, nice candle today. The stochastics at 11%. It's improving just a tad, and the MACD histogram is not great, but it says, yep, we could get a bounce. This is really important. I don't want to see the market close very strong triple-digit down today. It'll just make that Monday opening just terrible. At the same time, I would have preferred that we did that just to get rid of all this, and then I could have seen the VIX index right now, which should be coming down from the intraday high, VIX.X, there we go. The VIX index Didn't go above the 28.84 high of the 11th of October. It's trading, it had a high today of 27.52, and it's trading right now at 24.67 towards the low of the day. On the intraday, this is nice. This is good news. So it says to me, here comes another one of those rally attempts, and as long as the VIX continues to hold in the 20s through early next week, that's going to say, be careful, these are counter-trend rallies. If it's so, or the 20% area, that's very, very much better. Now, this is going to be very important. Within the context of what we're looking at here, just in the E-mini, just spiked to another high. It's gone to leg D in the 5-minute chart, only leg C, right at the 200-period moving average in the 10-minute chart, but the MACD and stochastic are already improving. This is a really important counter-trend rally. In fact, I'm going to call this F/C to give it a little bit of room in the notation in the Chapman wave, because the MACD is improving a little bit. It's got this little chop momentum to it, but the stochastic is making slightly higher lows. That's good. This is really important. In a way, I do not want to see any kind of whopping move to the downside on Monday, just because it's going to be so ugly. But at the same time, if we get a rally here, you could see a nice bounce. Look at the Qs. If the Qs do bounce, they can go in for about a good few days. I don't think they're going to go more than to midweek, because we've got the election coming up Tuesday week. I think there's going to be a lot of nervousness about this election. That's going to come into the market. So this is a technical oversold situation as far as I can see. However, for subscribers, I've said, this is also the moment that we start to look at stocks that we want to at least attempt to buy here, small positions, thinking that if they give good signs, we could add to them over the coming 6 weeks or so. Will that occur? Will that be the case? I'm hoping so, and as Larry Pesavento always says, hope is not a good technical term in the market. So we're planning, and we'll see if the plan works out here. But in the meantime, we are short, as I say, the Dow. We're short the semiconductor index. We've got a good cash position. I want peace and quiet. I want us to be able to look at the market and say, good, we've looked at certain stocks, waited, like, for instance, I'll give you a good example. We do not own it now. We took nice profits in the very short term, spiked to the upside. We got the Goldman Sachs at 218s, spiked all the way to 228, and we took profits to half position profits for a very nice gain. Then we're out. Now it's trading down at 212. It's gone slightly lower than the 210 low of the 12th. But here's the stock that I'm looking at. I'm saying to myself, if there's going to be another big bull move in the market, it can't just happen out of the blue. And if it does happen, it will probably happen because one of the sectors that was very weak, which is, of course, the financials, is XLF going from 275 down to the low just recently of 209. That's very important. But wait a minute, what about Amazon? And Amazon is an incredible company. I mean, they're not doing all that many things wrong. Made it 1,603, round number low. I spoke about this as possibly giving me a hat trick top in my daily, weekly, monthly charts, because there was a potential for a peak E coming in October. We will almost certainly get that. There's no way on earth that in the next 3-4 days, Amazon is going to 2050.51 for a new all-time high. But wait a minute, if it does have a huge rally between now and, say, the end of the month, which is Wednesday, I think, then we'd be looking at the candle being repaired, and then maybe it turns into one of those Chapman wave Roman candles if it closes at about 1800. I'm sorry, if it closes at, 1800. And then what do we do? That's not a good candle. It's a negative candle. So I'm looking at this, I'm saying, have patience. If you've wanted Amazon for a long time, a stock like Amazon, I think, is going to be coming down. Maybe in the 1500s, it's a good time to look at it. 1551 is the 14-period moving average in the monthly chart, and just have patience. That's really what I'm saying. Yeah, you could start some positions, but I would treat them as a nibble. I wouldn't get too carried away right now. Now, we're going to go to questions came in. All right, let's just do the usual. We're going to go to Boeing. Boeing is trading down 5 at 358. I think Boeing has got a bit of a problem in the daily and the weekly, but that monthly chart holding the 9-period moving average support of 341, that's going to be key for the next few weeks. And look, if you've got backlog going into 20 years, 18 years, 20 years, at least you've got a cushion on major pullbacks, because as soon as the market turns, you should be a participant in that next big up move. So, yep, we'll keep our eye on Boeing. No trade at all right now. Boeing, next question was the IYT. IYT is, of course, the transportation index. Trading came off the low. I don't know if that's an E or an F, but it came off a low of 176.50. All-time high was 209. You tell me that is the major decline. Look at that monthly candle. This is another reason why I feel there's no rush to be diving in, but there's no reason why you can't start. As I said yesterday, we had a question about trying just to start positions. I said, under these conditions, if you find that technically you're seeing some support in a stock you've been wanting for a long time, and it's down 20, 30% or so from the high, yeah, this is a good time to maybe start implementing a plan. Now we can do that. Before it was very, very dangerous. Question I had about, that was Triple M. Let's see, Triple M right now is trading up 57 cents. Yeah, like all of them, a little bit of a better candle so far today. Trying to turn around. Stochastic's terrible. It's gone under the weekly 200-period moving average in leg E. Still doesn't look great. I'll be back straight after these messages.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, Ron, we're back, and you can see on this page here I've got the arch formation. This arch formation is from my CD book called Introducing the Chapman Wave Methodology, and we go through all these different patterns. And I will go on Wednesday, I'll say where are we and what are we looking at, which patterns are going to be the most important for the coming period going into year's end. Well, this arch formation where you get a left side, right side price time match, what does that mean? It means that the number of bars going to the upside, if you're able to find the fulcrum, the midpoint, the plumb line at the top or the bottom to the way down, can give you a beautiful measure in time for where you're looking at the price to come back to in the arch formation. Well, let's look at the TLT. Let me go to that right now. The TLT is the Lehman 20-year Treasury bond ETF. Look at this pattern that you saw right here. There's the lowercase h pattern, one of the patterns we talk about in the Chapman wave. Comes back, breaks the left side low of the 116.49 level, and now we've already gone down much sharper. We've gone to 112. We're at 114.95 right now. But wait, where's the pattern? Here's a beautiful example of this pattern right there in the middle, where you go from a low that was formed right there on the 1st of August, runs up to 122 at 118.07, then it goes to 122.33 on the 24th of August, and then it comes down, and right on the very bar that makes, right there, the very bar that makes the left side, right side price time match, on the 18th of September, it breaks under it and creates another little H pattern. And now we're forming a rectangle pattern, so that's very important. I'll be discussing that pattern. I'll be discussing the cup formation and what to look for. You can see right here in the E-mini, we've made the V-shaped formation. The low that was formed right there, we've gone in one extra bar, we've gone to a leg C. Remember I said the 200-period moving average is resistance. Now the E-mini, after being down at the 26, 27, 25 level, is 50 points higher. You know, that is really important, and we've had this almost daily. This whipsawing probably is going to be for very select people entering the market on the long side here, and more people starting to look at getting out. So this coming Monday morning is going to be very important. That's the reason why I'm saying you want a kind of a save the day kind of attitude, because the market today closes. You would not believe that it was down almost 600 points, and in fact what we've done is we've come back already to just down 177. To me, that's the kind of action, in many ways, is the comfort factor. It's not good, but it's a lot better than the alternate. And that would be to reverse everything, suddenly having this huge selling pressure at the close, and then have a horrible session Monday, which would be really a double horrible session, because that's if the weekend is full of news about this really bearish phase. A lot of people will be selling at the open on Monday. They'll have all the cameras out. They'll have all the news media right there, and then the market could go to a huge V-shaped turnaround. And then we make the internal low. So what I'm looking at here is, yes, it is in the VIX index, in my rules of the Chapman wave for the VIX. This is one of those efforts that we look at and say it's a positive, but it isn't the positive. It's just one of many positive. In other words, it's a low, but it isn't the low as far as I'm concerned. But it could be a very important moment, because we'll see how we act, how the market acts Tuesday, Wednesday. Then you've got the fear of the elections, because that could upturn a lot of the what Trump wants to do. And I think the market's going to be kind of nervous about that. So I don't see us out of the woods just yet, but it's really important. There are going to be some stocks that are forming lows now that might be very close to the ultimate low. And therefore you want to be looking at that area. That's what we're going to do. Tuesday night, my webinar, 5 o'clock to 6:30. It's really based on what were the techniques that identified correctly the top that we made the day after the market made its high. That very morning, we went short the Dow. We remained short, taking a little bit of profits. We've kept the position. And what does that mean? You're going to be able to get the bottom? It's the exact reverse. Do you look at the same technical tools, turn them upside down, and that works? No, there are a bunch of other tools that I look for significant lows. And we'll talk about that, what we're looking for, and how we're going to start to deploy a heavy cash position. Because for those people that didn't go short and did lighten up, it's an opportunity now. Just taking it easy, no rush, identify, and capture. That's what we're looking at. MAN, M-A-N was a question that I got. M-A-N is manpower. Yeah, this is another indication. Together with Cintas, this is one of the things that I look at, one of the stocks. So manpower, this is jobs, etc. 136.93, January all-time high, trading now at 74, almost cut in half. This is serious stuff. It just doesn't repair itself in an hour, in a week, in a month. It takes a couple of months to start repairing the damage. Are we at 168.02 in Cintas, having made an all-time high? Just, it's unbelievable. It made an all-time high back in early September the 7th, 217.34, and now it's trading, what is that? That's 32 plus. So it's trading 50 points lower. I would say that that's a correction, 25% correction. And it's struggling. These two green candles over the last 2 days, hasn't made a new low. It's really working hard at trying to make this some kind of a low of importance. I consider that to be important myself, yeah. So question I had about, that was, RHI, which is Robert Half International. Job site, staffing, makes it, now this is no matter how I count it, I still get a peak C. I could say it's possibly an alternate count Z, but it goes to just about 80, goes to 79.91, trading right now at 58.73. Don't you think a 20-point correction, 25% correction in a job site staffing is important? I do. I think it's very important. I just think this is going to repair itself very quickly. Doesn't mean to say you couldn't have pretty decent rallies, and maybe we're really close to the actual low between 58 and 52 is only 6 points, 10%, but that's a lot better, than buying it in the 70s and seeing it come down to the 58 level. So yeah, Robert, RHI, 58.73, down 99 cents today. I want to do this. A couple of questions came in. I don't know if I can do them right now. I'm doing, yeah, all right. So look at Raytheon. Raytheon, the darling of Wall Street, right up until May or so. What was the high was in April? Yeah, April, the week of the 27th at 229.75. Trading at 174. That's a decline, right? And that's Raytheon defense. So I think the war that we're looking at is more an economic. I'm not sure if war. It isn't really war. It's economic. The bayonets are out, and it's in the tariff department. Let's put it that way. Taxes and tariffs, the two T's. I'll think of this. Oh, we know who the third T is. Trump tariffs and taxes.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. So there are a couple of good candles today. Look, EF has a 38.82. It's down 29 cents. It went just a nominal new low from the low of the 24th just 3 days ago of 38.36. Low today is 38.14. Just attempting a leg F, unless it's an alternate count, F/B in the weekly chart. So it makes 41.63 really important to rally to over the next few weeks. It's just got to get there, and it's got to get there quite soon because the monthly chart really does not look very good. Oh, that's the iShares Emerging Market ETF. And right now, just for those of you, I know that a lot of people talk in the den about what's going to happen. Right here, 26.76, this is going to be very important because you're just above the 200-period moving average of the 10-minute chart. And that would say to me that if at any point in the 2:30 to 3:30 time frame, if the E-mini is above 26.80, I don't think you'll see much in the way of last hour selling. You could see selling, but nothing like we've seen over the last few days, because that's going to say, you know what, phew, survived the day. Could have been a really ugly day, and it's very unusual for Fridays, except March the 6th, 2009, where we made the Friday low, major historic low, because it was Monday that the S&P made its low. So let's just see what happens here. Now the Dow's only 167 down. Oh, I think we survived that. That's really important. I don't mind that. And what I would say certainly to any subscribers listening, you could even take a little bit more off if you wanted on our short positions right here, because Monday could in fact turn out to be a nice gap up day if we manage to do this. We'll see. But in the meantime, back at the ranch, it's a process that I'm looking at. And are we oversold? Of course you're oversold, but just like overbought, you can stay overbought for a long time. I think that we are really close to some pretty decent bounce, whether it was today or Monday, as long as we are not down that 450, 650 area today, because that would have just created a devastating Monday. I just don't see how there's any way out of that. Very important to be coming back like this right now. The day is still young. It's only 1:45 in the afternoon, Eastern Time. Anything can happen. But the testing it was done, and then there was a failure. Look, intraday, look at the, let me just go there, and I'll show you. Maybe I'll go to the 120-minute chart. There we go. So, yeah, oh, here we go. The 120-minute chart in my Dow work that I show my subscribers. So, for my webinar on Wednesday night, besides if you sign up and you're not a subscriber, you can become a subscriber, but it's a money-back guarantee, and then you can come to the webinar. I think it's going to be a very important webinar. We made a trough E in the 120-minute chart of the Dow. There was a gap down. We're starting to fill that gap. That's really important. And what's most important about this 120-minute chart is the MACD. The histogram's improving. It's not great at all. It is still very ugly. And the stochastic's at 14%. So there's a big divergence between the low that was made back at the 24,900 area, back around the 9th or so. Then you got that bounce, and then it failed in an arch, this arch formation. And, yep, this is, oh, thank you for pointing it out. Yes, this is 5 in the Chapman wave, in the last of the Chapman wave. There we go. This is a 5, and that's important. That says from here you could get another bounce in the Chapman wave CW5, Chapman wave 5 methodology. So what does that say? Well, I'm putting this in, but it might be a little premature because the day is still young. Here's a 120-minute chart. So far this looks like it could have the ingredients of a 5, and it says, yep, we could get another bounce, another arch formation. Could be a bigger arch. If you go to the Chapman wave methodology, this is my CD introducing the Chapman wave methodology. Oh, look, here's a cartoon, one of my cartoons that I drew way back, and then I put it into the CD. The guy says to the lady, he says, with so much bad news pervasive this past weekend, the market must have taken it on the chin today. She says, no, it was up. He says, boy, if that isn't bad taste. All right, so we want to look at the dreaded H, and the dreaded H is chapter 17. Here we go. So this is a pattern that we're looking at. There's a certain point in the lowercase h pattern where it can start to extend and go like a lowercase m. And that m can be quite big. Sometimes it's very big. And we'll see what happens here. So this is exactly the pattern that we'd be looking for here in the 120-minute chart. It made a large arch formation. It went under it. It closed under it, under 24,899. Then it went back above it. It closed yesterday sharply below, in a 120-minute chart, that is, and now it's rallying. So this is a very good opportunity for the market to say, hey, you know what? We've done this for 3 out of 5 sessions. We've had almost every session rally, then drop sharply, and then try to rally again. Even the big session of yesterday went sharply high and then pulled back. So this is a good opportunity to see what can happen. Now the Dow's only down 123 points. The S&P, though, is still down 20. See, I don't like that kind of divergence. That's not good. So that's 500 stocks against 30. But it's really important to be noting that in the IWM, Russell 2000, it's down 0.63 at 148.48. It was down at 144, and the QQQs, and this is now on the way down. If it was on the way up, I'd say, I'm not that interested. But on the way down, with Amazon having taken such a big hit earlier on, and Google, the Qs are now at 169.14, even as we're speaking. They are improving, and finally the MACD is improving just a little bit. As I said before, this is a little bit better histogram than the others, and the stochastic is at 22% now, not in the single digits. So we'll see. The day is young. Anything can happen. On the one hand, I'm saying to myself, I would have liked to have gotten this all over Monday, and then we could have started fresh. This just merely, for me, sustains the whole move based on the monthly candles that I'm looking at, but it doesn't mean to say there can't be some really good trading possibilities. Let's see what a Cisco is doing here. Cisco, part of the Dow, nice candle, reversed at the high of the day at 44.98, peak D in the weekly, leg F in the monthly. All right, we have to watch this closely, because if in the next 3 weeks Cisco is not able to close decisively above 47.30, but in fact comes back and tests 44. Not good at all. Let's go to, Ford had a good day yesterday. Let's see what it's doing today. Hey, nice candle. Down just 3 cents. Had a spectacular move from 8.19 to today's high of yesterday to today's high of 9.06. Okay, so we're starting to see a little bit of improvement in some of the biggest laggards. Let's see what the IAI is. IAI is the iShares broker dealer. Okay, they went to a leg E this morning in the daily chart, a leg D in the weekly. I don't see anything just yet. It's going to need a lot of work. And let's just say that this is a very important moment. Thank goodness we didn't close at the low of the day. At least so far it doesn't look like it. We've got one segment to go, and I've got a couple of questions coming in, and we'll see what happens. I'll be right back. Dow is now only down 118. S&P is down 18. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, great programming coming up the rest of the day as well. And I'll be back with Tom a little later on. So this is my webinar coming up on Tuesday night. Timely. Basil Chapman presents the Chapman Wave tools they call the recent top and where we are now. What tools we're going to be using to identify, discuss a little bit of it here, but it's really a lot more complex than that. I think Dave White had a great comment in the den. He said, shorts continue to pile on and every tick higher. You don't want to be the last person to leave the party, and that's why on the way down we've been taking profits in our short positions. Now, look, this is going to be very important for a number of reasons. Why? Because there are just a host of very negative news events that are potentially out there, and they don't look like they're going to be alleviated all at once. It's going to be step by step, just as tops are made, like March saw the top in the semis, January was tops in some other areas. The October we saw the Dow make a new all-time high, and then it gave the sell signal. October the 4th, October the 3rd was the high. Tops are made in rotation. Bottoms very often come together because it's just a massive selling hysteria and the volatility index screams high and you get that V-shaped bottom. But when you get a whole series of lows that are made and rally attempts, it uses up so much of the energy to the upside that it allows for more downside. And now we need to just see some of that energy to the downside alleviated by some kind of a rally. How long it lasts, I'm just not sure. But be prepared. It can happen. But my bias right now is still to say there are too many stocks that I'm looking at that their monthly charts are indicating there should be more to the downside, but it's going to be very selective. Where the dollar is going to go, that's what we're going to discuss. We're going to discuss the dollar very as well. And we're going to discuss chart patterns. I'm going to give some lessons within it. It's like a class that I'm going to give. So Tuesday night, you become a subscriber. Not only that, we like to start our positions for the coming quarter, start looking at what we think is going to work. We can hold it for a long time. Look how long we had United Technologies. We had from May. We still have the dollar long from the low in April. We can keep things for a long time. 4 minutes. Hey, have a wonderful time, a wonderful weekend, and I'll be back with Tom a little later on. And safe traveling through.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.